Welcome, everyone. Today, we're talking to Eric Martel and the Martel family. This is a real estate venture that started quite small and is now doing big things such as apartment buildings and the flips of those buildings in cities such as Cleveland and Memphis. And so today, we're going to be talking about him, understanding his strategies, how he goes about picking investments, and his overall philosophy in investing. So before you get started, be sure to subscribe. Again, as you all know, all my subscribers get access to off-market deals, exclusive reports, and of course, all my annual events that I do for my members. So be sure to subscribe, and let's get started. All right, welcome everyone. Today we have a special guest, a rather successful real estate entrepreneur. To add to our list of many others. His name is Eric Martel, and his family has grown a business. Well, I tell you what, let me have him explain to you what's going on, and we'll go from there. So, Eric, how you doing?
Very good. How are you? Thank you, Tom.
Good.
Thank you for inviting me. Yeah. So, my journey into real estate really started, when I was 18 years old. I bought my first apartment building, an 8-unit apartment building in a rundown part of town, close to Montreal. I had a mentor at the time that was kind of showing me the ropes and inspiring me to move forward. And then after that, after graduating from university in actuarial science, I worked as an actuary, and I spent a lot of my time, my day-to-day, and every week I was basically converting corporate pension plan into 401ks, basically, and really moving the risk of retirement from the employers to the employees. And so I was really distraught by that, and also kind of like fed up with what I was doing.
Yep.
It was not a positive environment. When you're doing that, you feel like you're destroying the mesh or the net of society. And so I decided to move to high tech, blah, blah, blah. And then I moved to California in 2000 with my family.
As we can tell from all the sunshine.
Yeah. And so, things are going, they were going well. And, but then I after the dot-com crash, I lost a fortune in the dot-com crash. And I decided that this was enough. I had been traveling as an independent consultant and all over the US and America, and I didn't see my family. And my family was something very important to me, and I felt like I was really missing that. And I started focusing more and more on passive income and building passive income or family business and all of that. We did a number of things. We did a gourmet sauce company. We did, in fact, you're in Austin, so we had a couple of Texan barbecue sauces that we were promoting here. And so, but that kind of worked a little bit, and but it really gave the bug for my son, especially Antoine and Etienne, about business and about because none of these business, even though they were not great successes, they were also not major failures where we lost our house or cars and stuff like that, and we had to change the lifestyle. It was something that we did, and then it didn't work out very well. We shut it down, and then we move on to the next business.
Yep. And let me say one thing, and I think it's interesting. Most guests that I interview, most of them have a similar journey. They have, and it usually is around the '08 crash. I had a crash, I had all these assets, they depleted, I had to restart. And what's interesting, there's a great book by Napoleon Hill called Think and Grow Rich. And in that book, it's a really moving book, but in the book, he talks about, out of all the studies they've done with wealthy people or successful people, the one main ingredient is the resilience to try again.
Yes,
so you have that ingredient. So from that crash into what you're doing today, what are you doing today to build that passive income?
Yeah, so basically right now what we're doing, we started in 2014, I think, to really start building our passive income portfolio in real estate. So and we started just to do it for ourselves. Our first house was actually in Memphis, Tennessee. We had to build a team out there, and we basically did a BRRRR strategy, right? The buy a distressed property, renovate it, rent it out, and then refinance. So we did that, and then that worked very well. I said, okay, well, let's do a couple more, and let's do a couple more. And then eventually friends and family started knocking at our doors and saying, "Hey, what are you guys doing?" Because we had done all these other businesses before, and then they're just like, "Okay, what are the Martels up to?"
Yeah.
And so they say, "Oh, well, I want to invest with you," and oh, I'm interested, and okay, and that's when we decided to start Martel Turnkey and really and help people, that all the people that were wanted to start building a passive income portfolio. And then we started to basically create these properties and sell them turnkey rental properties. So they didn't have to build a team on the ground and figure out the renovations and all of that and finding the tenant and property management. It was truly turnkey. When they buy the property, there's a tenant in place. We also have like a price guarantee. So if the house doesn't appraise, then we're going to reduce the price to the appraised value. So really taking the risk out of the equation, and then it's cash flowing from day one. So that's what we've been doing now. We've been very successful. Oh, yeah, go ahead.
Yeah, no, I was just going to comment. I think the investment vehicle of turnkeys has definitely grown in popularity recently, especially with Robert Kiyosaki doing a mass marketing campaign on why real estate's the vehicle of choice. And I do a number of videos as to why it always outperforms stocks, or at least most times. But what happens is what we see is that because there's a flood of new investors are not really understanding what they should or should not ask. And I see a lot of clients pick up these turnkeys from other companies, usually above market value. And sometimes they're not sure of what to be looking for in inspection reports, what constitutes a good turnkey versus a bad turnkey. And so I can tell you all that the Martel family does produce quality product. And so this just goes to reiterate my point in earlier videos, to make sure that you're working with the right teams, because team and trust is really everything in real estate. So
yeah. I mean, our point of view really is that we are the expert on the market, right? We're the expert in Cleveland. We're the expert in Memphis. If you want to buy something in some other market right now, we're not the expert. But these two markets, we are the expert. And then, so as the expert, we should know what the true value of the property is. And if it doesn't appraise, then it should be on us to reduce that price to the appraised value when you're trying to finance it. And same thing with the rent too. Some other companies, they sell the properties, and then once you own the properties, then you start finding a tenant. And then sometimes the rent is not what they said on when you purchased it.
Sometimes.
Right? So, again, we're the expert. We know what the rent should be in that market, and we're going to find a tenant at that rent for you, and then before we close. So you're going to have a tenant in place, and it's going to be cash flowing from day one.
That's right.
So that's really removing, a lot of the risk that some investors would have if they go to a turnkey companies that doesn't have these kind of like guarantees.
That's right. And so for all of you that are curious and getting started into turnkeys, I'll put a link above. There's another video that you can watch after this one that talks about the comparison of stocks versus real estate and what you should be looking at and how to evaluate each of those in comparison. Yeah. Cool. So more, on a bigger scale though, you and the family have done bigger projects on buildings, complexes. Yeah. I know we saw one of your deals that came out. I don't know if we were able to fund it for you or not, but you it was in Memphis, and I just saw it recently listed with what looks to be a profit. So maybe walk through those numbers for us, or explain kind of what you did there.
Yeah, so we did such a fantastic job in Memphis with all the. I need to toot my own horn here, but we did a good job in Memphis, like renovating neighborhoods and stuff like that. And for some reason, it got noticed. So we were approached, actually. We always wanted to buy apartment buildings. In Cleveland, it's extremely hard to buy apartment building and find the right value there. And in Memphis, we wanted to get something in Midtown Memphis, but again, it was kind of hard. And somebody approached us out of the blue and said, "Hey, I've seen what you guys are doing in the single family. Would you be interested in multifamily?" I was like, "Yes, we would," and then we looked at the deal, and that opened up a whole, the person that we bought it from, this was on Monroe in Midtown Memphis. So and great property, 20-unit apartment building, and right in Midtown. And at the beginning, it was kind of okay. Not sure where Midtown is going, if it's going to be stable or slow growth. But right now, it's really growing very rapidly. I think because of Nashville has been booming so much, and then Memphis is getting a direction as well to get to be kind of a Nashville with a different kind of musical inclination. So there's a convention center downtown. There's a hotel downtown, a couple of other hotels opening up, new condos and all of that. So
and how big was the building?
I think it was 21-unit apartment building, the first one we bought, and then and then after that we moved into then that person that we bought from actually said, okay, well I have a whole portfolio of properties that I'm trying to divest from because I want to do some other type of investment. And he showed us the list of all the properties, and so we said, oh, we're interested in this, and then got started, and so it was very good.
Well, let me tell you. So I have a previous podcast with my buddy Matt Owens, who's really seasoned and just a savvy investor himself. He and I are working on putting, and this is for everyone to hear too, I guess. But he and I are working on some funds or ways to bring in more capital. So we should definitely talk more and get us all, on the phone. I've been hearing about Chattanooga, kind of from a local that Chattanooga is a big market that's up and coming. So let's I'll get a meeting with us three to talk more about that. But all right, cool. Yeah. So I know your family and team are all about education, as we are here at the Academy. Yeah. And one of the recent things that you're doing is your book. What is that about? And I guess where can my listeners get it?
Yeah, so my book, as I'm talking to investors and people that are, that are looking at real estate investment, they're kind of on the fence. They're uncertain. All they see is a lot of risk and a lot of complications and stuff like that. And all they see is a bunch of what I call barriers to this investment. And so my book is really about, based on all the discussions that I've had, is kind of like, what are those barriers and how do you break down these barriers to achieve financial freedom, which is the number one goal that everybody should have, is to achieve financial freedom. And after that, you can expand on other things. But you want to get rid of selling your time for money. You want to get rid of that 9-to-5 job first. And then you're free to invest into more complex investments or more flips and all that kind of stuff. But so my book is really about that. It's really about breaking down the barriers to financial freedom. So part of it is mindset, limiting beliefs and all of that. I spend a little bit of time on that. Spend also a time on aligning strategies to your goal. Yep. So there's so many different ways to invest in the real estate market. People get confused and they switch from one to the next, and then they always see that the next shiny object, and then they move to that and say, the returns are better there, and blah blah blah.
Let me ask a question. I want to dig deeper on one of those topics in your books. I think it's a really important topic. Some people talk about it here and there, more at the surface level, but I see it a lot, and that is the limiting beliefs. Okay, and this could be an hour conversation in itself, but let's just take a few minutes to talk about this because, I just put out a video this morning about what is passive income, right? And it's obviously it's a way to invest. It's a way that we invest in assets that produce income for us while we're not actually doing anything to produce that income, right? So you're passively investing and you're getting income for really doing nothing. So the common mantra that I said was, you make money while you sleep, right? Yeah. But on top of that, it's also a philosophy. And I think, and I'm guilty of this, I often come across things that I'm doing and I'm trading time for small money or, other savings that when you think about it, we have 30 to 50 years of good health and good life. Mm-hmm. Time is by far the most finite commodity that we have on this planet.
That's right.
And I think people who wake up and work a job they barely or maybe not at all like and have to get in the office by 8:39, grind all day, 5 days a week, they look forward to Fridays and weekends only to, dread Mondays. It's
Yeah.
just the worst. It's the
Exactly.
worst thing ever. Right. And
Yeah.
so this whole thing that you're talking about, the whole thing that I talk about, and that many of us talk about is getting away from that
Yeah.
philosophy, really
Yeah.
valuing your time and thinking about how you want to live life. Right.
Hmm.
And real estate and things like real estate, not just real estate, but other investments as well allow us to do that. So why do you think people don't appreciate that view, or if they do appreciate it, why do you think they don't proceed with making those actions happen?
So I think part of it is that again, there's these limiting beliefs. I think this is very critical. They would think they have things in their mind, in their mindset that okay, well, this is you know all kinds of things. It's oh, I'm not good at finance, so I invested $500 in something and I lost it, and then and then oh, so I'm not good at investing. Uh, and then you have all kinds of other things coming out like oh you need money, you need a lot of money to invest in this, and you need a lot of time and all that. So there are investments that yeah they require a lot of money. There are investments that require a lot of your time to complete, but it's not true of all the investments that you can choose. There's a whole big marketing machine also out there that is selling people, telling people that hey, they should invest in the stock market and they
Mm-hmm.
should invest in this, or they should buy an annuity, you know,
Yep.
which is my
Yeah.
one of
Well,
my peeves.
real quick, what's amazing about annuities is keep in mind they're funded by bond returns typically.
Uh-huh. Yeah,
Well, I don't know if anyone's following the markets today. Bonds aren't offering zero returns.
yeah,
So just like the pension plans, I don't know how these annuities and how these pension plans are going to be able to afford their future guarantees to investors. So
well, they count on, so part of that, I mean, I was an actuary, right? So part of it, yeah, there's the bond, there's an investment curve for the bond, but part of it, part of the funds that what they're able to pay you is that some of these people are going to die,
oh
and
yeah,
then there's going to be a residual amount. So they're making money when people die,
and they
and that
redistribute that.
amount
Yeah,
they distribute that.
yeah,
So I mean, you buy an annuity, for example, and then and then you die a month later, they start paying. You give them $1 million, and then there are some waivers that you can get to make sure that they pay at least the amount, the premium that you paid
hmm
initially, but that costs money. They reduce the amount then that you get. But yeah, I mean, you die a month later. If you don't have that waiver, the $1 million is
yeah, it's
gone, and you got $3,000 in your bank.
yeah, and not to get political, but I'm not a fan of insurance companies across the board. So, they seem to be the poison of our society. But
Yeah,
anyway, so cool. So I'm with you, right?
yeah,
I think getting started is the hardest thing. I got
yeah,
started kind of on a fluke where I was living in the Bay Area. I was in my 20s, couldn't afford to buy anything. So I was like, well, I have all
yeah,
this cash. I'm not going to let it sit in the bank. And so I
yeah,
just started buying rentals kind of by accident, really.
yeah,
And today, again, I have Stephen Roach coming on here tomorrow talking about the value of the dollar and where it's going. I think, including Ray Dalio, Warren Buffett, many are thinking that cash is by far the riskiest asset in that
yeah,
inflation's probably
exactly.
coming, right? So
Yeah,
if you've got
yeah,
cash in the bank, just be careful. You should probably get that thing deployed into
yeah,
assets that will benefit from appreciation. One of those will be real estate. Stocks will
yeah,
also benefit from inflation. But anyways, so going back to inaction, right? I think,
yeah,
so you talk about they're afraid of losing money because they don't know what they don't know.
yeah,
Uh, it is a large amount of capital. Usually, I mean, $25,000 to $40,000 to get started. It's not small
yeah.
money.
That's right.
Um, but beyond just the financial stuff, I mean, what is it? Do you have an idea of more, in personality or maybe like just fear factors that limit people from making the first move?
Well, I think it's about really setting. I think setting the goals, setting a good goal for yourself that is achievable. That is something that's also going to be something inspiring you to do something. And what I call them fiat goal, FIAT, which
Yep.
means that this is given by authority, and basically something that's going to help you focus. So focus on, so that that, oh, if I want to save money to buy a rental property that's going to give passive income, and I need $20,000 for that, then okay, then if I'm buying a car, then that's not getting me closer to my goal.
Yep.
So it's something that's going to help you focus on your goal, and so that you know that as soon as you go away from that, then you get some kind of like warning sign to say, okay, well, yeah, you're getting away from that goal.
Yeah.
Go ahead.
Yeah. No. I was just going to piggyback off that by saying, since the Great Depression, our economy and really the structure of our system has been built and encouraged people to spend money, not invest it, not
absolutely.
recycle it, right? And it's actually gotten worse. If you look at the percentage of GDP, attributed to just consumption, spending of the consumer, it has gone up year over year over year over year to about 70% today, right? Yeah. And our society has all these pressures, impulse marketing ads and everything else to make you want to spend, credit on, or cheap debt, layaway, all these sort of programs to make you spend. It's a consumer-based economy. So it's completely contrary to think that, oh, I should not spend. I should take this money and invest it in income-producing assets. And so I think my guess is beneath a lot of this is this core belief that our system has put into us to spend versus invest. And so you take that with the fact that you lost some money by investing $1,000. So that is another fear then on top of that. You take the fact that you think real estate might be too complex. You take the fact that you're afraid to put too much money in something, and it just compounds. And I just imagine, like, what if our system had taught us initially to invest before we spend? It'd be the other way around, where we'd be afraid to buy cars and we'd be afraid to do dumb things like buy a Gucci bag or whatever it is. So. Yeah.
Well, that's part of the problem, right? I mean, the education system doesn't educate people to invest in themselves, to invest for themselves. It's a machine, to a conveyor belt of people to go to factories and go to offices, which is the new factories. And I mean, this is what they're about. I mean, when I was an actuary and studying to be an actuary, I mean, you would think that I would know anything there is about interest rate. And in fact, I had a whole course about the theory of interest and all of that. And I learned, what I learned in that is kind of how to basically use that to work for an insurance company, work for a pension plan and stuff like that. And I read recently, like a few years ago, a book about, I think it's called The Notes Professor. And he has a book, and he was talking about, and it's all about theory of interest. I mean, but used in a very practical manner, very pragmatic. And then he said, well, if you do this, you do that, then you can increase your return this way. Why don't you do this, and then, shorten the term, or pay more often, or pay less often, or something like that. And then it blew my mind. That book blew my mind because, for one thing, I thought that I was the expert on interest and then how to use it. And then this guy was just like, he was using it in such creative ways that it just blew my mind. They don't teach you that in university.
Oh yeah, I mean, you're spot on. I mean, I have another video about how to get started if you don't have a lot of money, like mobile home investing. If you're a hustler and you can find deals and have a handy arm to you at all, you can do a lot with a little bit of money.
That's right.
And when you really figure out the beauty of seller financing or interest payments or cash flow, it's just it's almost addictive. Because it's like you get it. It's like, that's it. This is the wealth cycle. This is how it all works. And the journey is fantastic. I think most people have had an interesting journey starting out. I had a rough one starting out, a year or two, and then you kind of just grow from that. But I mean, I think you're spot on. I think the market's slowly realizing that the conventional ways of doing things are just simply not the way to do them. So good stuff.
I mean, and the retirement safety net is not going to be there either. No. I mean, you're going to have Social Security. I'm assuming Social Security is going to be there, which some people are concerned about that.
Yeah.
And then the corporate pension plans are gone. So there are very few people right now that are on defined benefit pension plan, corporate pension plan. Everybody's on 401ks, IRAs, and all of that. And that means the burden is on you to invest. Yep. And then how you're going to convert that money when it's time to retire, that's going to be key. And an annuity is not the choice.
Yeah, it's I'll say one last thing and then we'll close up here. I
Yeah.
have another podcast interviewer coming up here. Jonathan Torpoca, he manages about $1 billion of assets, mostly in pension plans, right?
Yeah.
Now, so I'm always talking to him like Kiyosaki's talking about a massive problem with pensions. What do you think? And he's like, yeah, he's 100% correct. Chicago, California, and a lot of other cities have all these false assumptions. And he was telling me that at least 85% of all pension plans will probably go bankrupt, which is a massive problem. So what's going to happen, he was saying, is that you have two things that will happen. You're going to see those places that have the broken systems, like California and Chicago, have to raise taxes even more. And they're probably going to have to offload the management of the assets to private equity firms that can do it correctly. So it's just interesting because I think people put so much reliance on 401ks, on pension plans, on these benefits that they don't control. And it's so backwards. It's so backwards.
But they think about it. They think that, oh, I have money in my 401k and then with my employers and stuff like that, and I have some matching and they think, but that's not the plan. The 401k is not a plan. The 401k is a tool.
That's
you
right.
need to know how that, what the end game is going to be and how you're going to convert that to a stream.
That's a great point. Yeah. You're right. These are tools. These are not the plan. So even real estate or, passive investing and whatever else, they're all just tools. And you're spot on. And I know in your book, you talk about building goals. So that's awesome. So one more time, where can people find the book? I think what we'll do also is we'll put the book link in the YouTube video. So go ahead and check that out. And any questions about their turnkeys or the process, you can email me at tom@betterturnkey.com. And so again, Eric, where can we find your book and what else is going on?
Yeah, so the book is going to be published in the next few weeks. And at the beginning, I'm going to give the book for free on Amazon. So
Nice.
To register, so if you go to Martel Eric, so marteleric.com/book, you'll be able to give me your email address. It's going to allow you to give me your email address. And then once the book is launched, I will send you the link to get it on Amazon for free. And that should be in the next few weeks. Yeah.
Awesome. Yeah. So I'll put that marteleric.com/book.
Yeah.
And I'll put that in the description as well. So thanks again, sir, for joining, and we'll
Thank you,
get
Tom.
you back on here in the next few months.
Yeah, I think we have a lot more to talk about.
Oh yeah. Cool.